Let's talk about a trading strategy that on the surface looks, well, kind of boring. But here's the thing. What if I told you this boring strategy was honed over years by a trader named Craig Percoco? And the results? Yeah, they're anything but boring.
So, how not boring are we talking? $18,000? That's the profit this exact framework pulled in just 2 weeks. Now, when you hear a number like that, you're probably picturing some super complex, high stress, crazy genius level strategy, right? Well, the reality is completely different. And that's exactly what we're going to unpack here.
Okay, so get this. That 18 grand in profit, it came from a win rate of only 55%. Just let that sink in for a second. That means nearly half the trades were losers. For a lot of new traders, that's a massive mental block because we're taught to believe you have to be right all the time. This right here is proof you absolutely don't. So how is that even possible? I mean, really, how do you make serious money when you're wrong almost as often as you're right? Well, the answer isn't some secret indicator or a magic formula. It all boils down to two key things: having a professional mindset and, just as important, a repeatable process. And that brings us to the core idea behind this whole thing. It's about winning by losing less. See, the goal isn't to be a fortune teller and predict every single twist and turn of the market. No way. It's a total mindset shift. It's about being ruthless with your losses, cutting them short, and letting your winners run as far as they possibly can. And here's where we really see the difference between a beginner and a pro. The beginner has this deep emotional need to be right. Every loss feels like a personal attack, you know? But a professional? They're detached. They act like the casino, not the gambler. They're just running their system, their process, over and over again because they know their statistical edge will pay off in the long run. And that process, it has to be simple. The guy who developed this is super clear about this point. If your chart is just a mess of a million different indicators and lines, you're not trading a system. You're just guessing. You're falling into analysis paralysis. A simple, clean process is something you can actually repeat perfectly every time, and that's the whole game. It really all boils down to this one idea. You cannot improve what you do not measure. Think about it. If your trading is just a series of random emotional clicks, how can you ever get better? You can't. A systematic, measured approach is the only way you can actually see what's working, what's not, and get all that emotion out of the way so you can actually make real progress. All right, so we've got the mindset down. Now let's get into the nitty-gritty. The core of the strategy is this really straightforward 3-step model for spotting a trade. It's a really simple sequence. Step 1, identify the condition. You're basically asking, is the price way overextended, either too high or too low? Step 2, confirm the trend. You're waiting for a clear break, a crack in the current structure that screams something is changing. And only then, for step 3, do you start hunting for your exact entry signal. So what's that entry signal? Often, it's something called a fair value gap, or FVG. Now, don't let the fancy name scare you. It's actually super simple. It's just a 3-candle pattern where you see a big, aggressive price move that leaves behind an imbalance, a literal gap in the price action. And what's cool is that this gap often acts like a magnet, pulling the price back towards it. That's your high probability entry zone. Okay, but here's the key. Not all of these setups are A-plus trades. To find the best of the best, we need to look for what are called confluences. Think of it like stacking evidence. We want multiple, separate reasons that are all pointing in the same direction. The more confluences, the higher our confidence in the trade. The first big piece of evidence, our first confluence, is the break. And we're not talking about the price just kind of poking its head through a trend line. No. We want to see a powerful, decisive move that just shatters that trend line. That's a huge signal that the old momentum is probably toast. But this next one, this is the real secret sauce, the retest. After that big break, you'll often see the price circle back to kiss that old trend line goodbye from the other side. This is your confirmation. It tells you that what used to be a floor, support, has now become a ceiling, resistance. Getting into a trade right at that retest, that is one of the highest quality setups you are ever going to find. Okay, so you get the logic, you see how it works, but the most important part of all of this is that you absolutely should not just take my word for it. It's time for you to prove it to yourself. And the best part? You can do it without risking a single penny. And the process for doing that is super simple. You just open up a tool like TradingView's Bar Replay, which lets you go back in time and trade the chart like it's happening live. Then you just follow the checklist we talked about, log every single trade, and measure your results. This is how you build real, undeniable proof and the confidence that comes with it.
So let's wrap this up with one last question, a question I really want you to think about. Take a hard look at your own trading. Is it a real process, something measured, something repeatable that you can actually track and get better at? Or is it just a gamble? Is it based on hope or a gut feeling in the moment? Because honestly, the answer to that question changes everything.